Hi, I'm Jim Juback, and welcome to my YouTube video for Wednesday, January 18th. January is kind of, for me, a transitional month. I mean, Christmas is over, the kids have gone back to school, we're sort of slogging through the winter, but we can start to imagine that spring is coming. I don't quite get to my full imagination until I get to Groundhog's Day. For those of you who are not followers of Celtic festivals, Groundhog's Day corresponds to a major Celtic calendar marker because it's halfway in between the winter solstice, the darkest day of the year, and the spring equinox. So when I get to February 2nd, I go, okay, I can sense spring coming. It happens to also be, strangely enough, the day after the Fed meets and announces interest rates. So we'll have lots of excitement on February 2nd. Okay, so today's topic is get ready for the tech earnings flood. If you like this video, please give us a thumbs up. Subscribe to my YouTube channel. That way you get notification of when we're doing videos. We do about 3 a week, but not always on the same day. And if you want more of my stuff, including 3 portfolios and a link to let you download my piece on 10 most important trends for 2023. You can go to my free site, that's jubagpicks.com. And if you subscribe free to the alerts there, you'll get all of those posts from that site. Or there's if you want more, you can go to my paid site, that's jubagam.com, and that has 6 portfolios instead of 3, including some options and ETFs and a very long-term millennial portfolio. Okay, so this is kind of a breather. We ended last week with bank earnings. This week we've got Alcoa, which used to be an important earnings stock. It's not anymore. Fortunately, I guess, because right now the Wall Street estimate is that they're going to show a loss of 73 cents for the quarter after showing a profit of the year ago quarter of 250. If this was a market indicator, that would shake up the markets, but it's not. Really, the stock that might be interesting this week is Netflix, because it reports on the 19th. And they're going to show 44 cents this quarter of earnings, positive, versus $1.33 last year. And this is the problem for tech earnings, which really start the week after this. That year-to-year comparisons are likely not to be really good. And the question is what companies say about the year going forward in terms of guidance. So on the 24th, we have Microsoft. Let's look at a couple of charts. This is Netflix. You can see one of the things about Netflix is that it's been doing pretty well, starting to show a little weakness here, and I guess that some people sort of positioning themselves ahead of earnings on the 19th. We also have Microsoft, which is the first of the tech stocks. You can see that's been pretty down, but then it looks like it's been recovering. The question is, we're getting a little flatness right there. The question is whether going into earnings, what the trend is going to be. I think it's pretty much unpredictable. And here's on the Microsoft is the 24th, and then we get Apple, so the next biggie. As you can see, we're starting to get some action here, and the question is where we go from here, and that's on the 26th. After that, we wait another week, and we get Amazon on the 2nd of February, Groundhog's Day, and Advanced Micro Devices, AMD, on the 7th, and Google on the 7th. I think this is really going to set the tone, plus the Fed earnings announcement, Fed's interest rate announcement. This is really going to set the tone as we go into February. So watch those tech earnings. Thanks for watching. It's been Jim Juback. If you like this video, please give us a thumbs up. Subscribe to my YouTube channel. That way you get notification of when we're doing the next one. Subscribing is free. Speaking of free, you can also go to my free site, jubagpicks.com. That gets you access to 3 portfolios. Or if you want 6 portfolios, including some ETFs and some option plays and some longer term stuff, you can go to my paid site, that's jubagam.com, and you find links to all those down below. Thanks very much for watching.